All right. Hello, everyone. Welcome to our September 23rd edition of This Week in Crypto. Looking forward to getting into some of the many market news updates, price fluctuations, what have you, about crypto over the past week or so. Obviously, it's now been over a week since the big Ethereum merge. There have been many other things that have impacted the markets, particularly the FOMC rate hike of another 0.75% to combat inflation here in the US, as well as a lot of talk about the XRP and SEC battle going on. We can see quite clearly that XRP was the big winner of the past week. If you were a longer in this particular asset, you did quite well compared to the rest of the assets, at least here in the top 100. You can see it jumped 49% as opposed to Bitcoin and Ethereum both fading over the past week, which has been the common theme really throughout 2022. But, there are a few altcoins that have done quite well despite the overall continued fade of market caps in crypto. We can see it wasn't just XRP, but Stellar had a good week, Kronos, Algorand, ApeCoin, Chain, Chiliz, among others. We also see Helium over here, which has actually declined quite a bit before this past week finally showed a bit of recovery. Regardless, it does look like it is a continued volatile time after the Fed made its announcement back on the 21st, Wednesday, and prices expectedly took a hit, as they have pretty much in every single subsequent announcement of interest rates being raised in order to prevent recessions from occurring, prevent inflation from getting any worse. It's no secret that there's been a major correlation between crypto and equities markets throughout 2022, and that has yet to change. That will be the theme of our talk today, but we will also try to get into plenty of other topics. We will come back to it, but just to give a few other updates, we do see that there has been a bit of a rise in discussion related to Bitcoin over the past week, while Ethereum, as time has passed since the merge, it started to drop off a little bit. So the topic of Ethereum and its very volatile prices has started to become a little less interesting, at least compared to the major hype that was going on leading up to the merge last week. So that makes sense. Stable coins are up slightly. At least Tether is. USDC on the other end is not. We can see XRP here almost getting pretty close to double the amount of discussions that it had compared to a week ago. So the mainstream has certainly figured out that XRP is fluctuating in a unique price pattern compared to anything else in crypto right now. And that's caught a lot of people's eyes. In a vacuum, this is generally a bad sign. If an asset is surging and the mainstream is suddenly talking about it a lot, as we can see very clearly on this chart. So this is XRP over time. This typically means that there's a little bit of FOMO happening. I got to switch over to XRP here so you can see what prices have done. And, we can see on these big spikes, like right here, correction happened right after, another big spike right here, mini correction, another big clump of spikes here, and there was a mini correction. And then at the latest, we had this big spike, which you had a couple hours to react to before this correction occurred. And that's the latest that we've seen. Now, it'll be interesting now to see if we still see a very high amount of social volume, as the price is very polarizing at the moment, or if it drops right back down to, single digit mentions per hour, which would be more of a sign that the mainstream no longer cares. The XRP hype is now over, regardless of the lawsuit that is currently going on, where there's optimism that there will be a settlement, which people consider to be a good sign for XRP's price overall. We'll have to wait and see how that goes, but we can also break it down and see that the major hype has been really on Reddit, a little bit on Twitter, but you can see like the overall rise on Reddit over time. They've had a lot of discussion related to XRP, and you can see just how correlated each of the big social volume spikes are to the price tops that occurred, even this latest one here. So what we're going to want to pay close attention to is how Reddit's opinion of XRP changes now, because it does seem pretty clear that they are impacting the price in a major way. We even had a couple posts that went out about XRP over the past week, and they got major traction. So this wasn't just on the XRP subreddits either. It was like the crypto markets and cryptocurrency subreddits. So clearly people are paying attention, and it's an asset to look out for. We may do a little further analysis on it later, but to move on for now, let's jump right back into some FOMC and inflation talk, because this is clearly a topic that is going to impact all of the markets, not just XRP, but Bitcoin and Ethereum, and thusly the rest of the markets. So we can see the big spikes over time in inflation have usually come right at price tops. We've seen one way back here in August. In fact, let me zoom out a tiny bit. We'll go back past 3 months. So this one had a small price top, but then an absolute surge going back to mid-July. This one here, a surge came right after. And then this one was kind of happening as the price was falling off a cliff. You can see clearly that the increased discussions of inflation lead to mass volatility. That's very clear. Whether any big spike automatically means the price is going to go up or down, well, that varies depending on which spike we're looking at. So it's pretty tough to be definitive on that. What we can do is also look at the FOMC spikes. So this is interest directly in when the FOMC is discussing interest rate hikes. And obviously, pretty much every single time that they have discussed the possibility of it, they have dropped the hammer and raised interest rate hikes. And that's created polarization as well. You've seen when the big interest rate hikes have happened, we can go back to the last year. And boom, very clear. We had discussions going back to mid-December. This was an actual interest rate hike in late January, another one in mid-March, early May, mid-June, late July, and then the last one in late September, really. So you can see with each one of these, there's been a varying result in where prices go thereafter. But overall, these spikes in both inflation and the FOMC are the ones that are really shifting the markets to and fro whenever they're occurring. If we go to our main charts page and we go to our template to look at the correlation between Bitcoin and the S&P and even gold, we see that the correlation continues. Now it's been a little bit of a wild ride. Obviously, these three lines here are not on the same axis. The S&P does not fluctuate as volatile as Bitcoin does. Even gold does not fluctuate as volatile as Bitcoin does. But you can still see when they're plotted on their same respective axes on the same chart, they tend to stay fairly in line. I mean, obviously, it was very tight going back to the early part of the year. And we saw a little bit of separation right around here in late July, where the S&P really started to rebound well, while Bitcoin did not. And this was a big concern. However, if we switch Bitcoin to Ethereum, and I unlock, so it'll automatically go to Ethereum, look how much tighter the correlation is. It's actually much less separation. As you guys probably remember, late July, early August was actually quite good for Ethereum in particular. And it actually rallied quite hard going into the merge, which occurred right, I'll even draw the line. The merge occurred right about here. Whoa there. So here's our merge time. Actually, it was right on the 15th. There we go. So you can see where the price drop off occurred, this green line. That was right after the merge. There was just an immediate drop off where prices since then have gone down, yeah, more or less I saw anywhere between 17 to 19%, depending on the actual exact time of the merge. But it has not been great for Ethereum, and we will get to that a little bit. I know many of you are looking for an update on how things are looking for the number 2 asset now that more than a week has passed since the merge happened. But regarding the overall correlation between crypto and equities, it's still quite tight. If you've been on our previous calls, we've made it clear that when there is a tight correlation between crypto and equities, it is usually not a recipe for rising prices. It doesn't necessarily mean that prices are going to drop off a cliff. It simply means that retail traders who are in both equities and crypto are making similar decisions on whether to buy or sell in congruence to one another. And because of that, there's going to be a natural correlation that's going to kind of prevent Bitcoin from being on its next bull market in most cases. Almost every big bull market that we've seen in Bitcoin's now 14-year history has occurred when it simply did not care what was going on with the S&P 500 or other world markets. And when this sector is not being held back by another, and inflation and recession and things like that are not something that is really in crypto traders' vocabulary or their interests, it usually allows crypto to grow organically the way crypto is designed to do. But because we have not really seen any sort of break between the correlation, at least over the course of 2022, it's pretty hard to have Bitcoin and Ethereum and other assets be able to break out the way we're all hoping. So for now, this is really what we're looking at. You can even see gold here is very tightly correlated, especially since mid-July. And until these three, stop hemorrhaging, it's very difficult to find that exact bottom point. We need some encouraging news, and obviously this latest interest rate hike was arguably the most expected out of any we've seen thus far. So the argument is, is it already sort of the fears of each of these passing interest rate hikes, are they already baked in a little bit to prices? My argument would be yes, they are partially baked in. It doesn't mean that we're still not going to suffer a little bit every single time one comes down, but I would argue that each one has lesser impact than the previous, because the markets are quite used to it now, and many are resigned to the fact that interest rate hikes are aimed by the Fed to probably be around 4 to 4.5% when it's all said and done. I think this last one put the interest rate hikes back at 3.25. If someone in the chat knows the exact number, let me know. But we're definitely more than halfway there. I think we're 2/3 of the way there right now. So as far as further interest rate hikes go, there's only so many more barrels that the Fed is going to fire before they're going to be content and say, all right, now we're going to let the markets play out organically the way they want. But that's kind of the update on interest rates right now and what we're seeing. I'm just going to go to chat really quick to see if there's any chatter here. Look at Fed's fund rate versus Bitcoin. Paints a clean picture. So just to clarify, Danny, are you referring to our social trends and the actual? Oh, I see what you're saying. Let me see if there's a chart for that. We don't have one on Santiment, but if we do funding rate versus Bitcoin price, I bet we can find a quick chart. It's looking at exchange funding rates. Maybe if I put in Fed funding rate. I don't know if this is the chart you'd be referring to. It looks like it definitely has some inverse correlative effects. This chart only goes up to 2021, so it's an old chart. But Danny or anyone in the chat, if you do have a link, feel free to drop it in the chat and we'll pull that up here on stream. I'm very interested in seeing what you're referring to. And Balaresh, if you see someone drop it, just let me know, and I'll head over to the chat and open it right away. For now, a few other social trends we can look at. We can always look at something like the word bottom. And because there are less and less people in crypto right now, it's going to be misleading to just look at the raw social volume, because the overall social volume is going like this right now. So if we click on social dominance, it's going to give us a better view of what percentage of discussion is related to the word bottom. And you can see there's been quite a rise. So there are people who are trying to call the bottom during all of this pain going on right now. Typically, we don't want to see this kind of encouragement and quote unquote hopium. If anything, we want to see continued fear, the assumption that prices are going to fall down to zero, all of that stuff, so that we can feel most confident as market contrarians that are justified in being contrarians based on backtests showing that's usually when prices reverse. We want to see trader pain and lack of interest in buying while prices are low, because with prices being sometimes a self-fulfilling prophecy, if everyone believes this is the bottom, it usually is not until everyone starts being disinterested again. That's the real bottom. We can even look up the word hopium, right, which has been something that's been thrown around quite a bit. And a lot of people use this word to kind of mock people who actually are optimistic of a price turnaround. So this would be kind of if we see a lot of spikes in the word hopium, it's a sign that people are bearish, because they believe that the people who are still optimistic are foolish, right? Let me give it a refresh, because it usually will load pretty quickly. There we go. So not too much special. I mean, you can see just how much it really started to rise in late August, right after the big plummet. So this is, an increase in mockery toward the people who kind of think that crypto will be able to turn around soon. It's interesting because there was a huge spike up here as prices were rising, and a lot of people were actually right. They were kind of making fun of the people who were really FOMOing in as prices were rising leading up to the Ethereum merge. And after that crashed, the chatter didn't stop. The whole idea of being optimistic right now is almost funny after such a long stretch going back to November of last year. So we're talking about 10 months of really declining prices now. It's hard to remain optimistic. Thus, we get big spikes in a word like hopium, which is interesting to look at. These counter indicators can go really deep. All right, next up, why don't we go to some Bitcoin metrics here? Just want to check the chat one more time. 10-year versus BTC. Yeah, like Max is saying, Danny, feel free to drop any charts. I would love to look at those and do a quick analysis on them. Okay, so Bitcoin, what is going on with the big king of crypto right now, the #1 market cap asset that many have kind of deemed as pretty boring as of late? There's a lack of social interest right now. Let's see if that's starting to change. And we'll start from the top here with circulation. It's been pretty much run of the mill, nothing too crazy going on. Bitcoin's NVT chart is continuing to show bearish divergences for a third straight month. July was semi-bearish, August bearish, September bearish. We'll probably end the month this way unless there's suddenly a huge pickup to end the month. And then on the Ethereum side, while we're here, we do see that it's actually a bullish divergence, but that can be misleading because there was so much circulation happening in the days prior to the merge due to people shuffling coins around, trying to be the best position they could for the big event. But going back to Bitcoin, circulation, I mean, it makes sense as we can see the trend line over the past 6 months kind of declining as it has. Daily active addresses, on the other hand, pretty neutral. I mean, we are still a little bit down from where we were 6 months ago, but prices are down way more, so that's really not the end of the world. Daily active addresses looks more neutral here than anything. We don't have the same model that we do for circulation to show just how bearish or bullish the divergence is. But regardless, it doesn't look all too exciting or impressive right now. Now, MVRV is an important one we can go over. The 30-day MVRV is sitting at about negative 4.5%, while the 365-day is down to about negative 43%, pretty much around where it was last week. It's gotten a little bit worse. Worse in our case would be a little better because of the fact that the lower this goes, the higher likelihood there will be an event to allow prices to pump back up again. But for now, the average returns of 365-day traders that are active over the past year is really, really down. And for a metric that needs to fluctuate around 0%, there's some making up to do that can actually be a glimmer of hope for bulls out there, because there's only so far down that the 365-day MVRV can go based on history. If we go back to, let's say, 2015, look at the past 7 years, let's check out where the valleys lied. We see only one other time where it got below where it really was now. If we lump these two together, really, we see that the actual base was negative 47%, and we're at negative 43% now. So the only other time we got below that was a negative 53% in the final month of 2018. So we're going on almost 4 years of time where the 365-day MVRV was not as low as it has been. So, this is not necessarily an immediate bottom signal. This is definitely a long-term signal, but it does show that in a vacuum, we are closer to a bottom and there is less risk than usual, based on what average trading returns look like right now. So if you are courageous enough to go into the other traders' bleeding portfolios and buy right now, you could be rewarded. And history says that rewards happen more often now than in normal times or in positive MVRV times. Let's take a look at funding rate here. I'm going to have to zoom in quite a bit here. Let's go to the last 6 months. Okay. So the funding rates right now have mostly been down. I know this is a lot of noise on this chart. Let me zoom in. We'll just go super zoomed in to the last. Okay, much better. So sitting where we're at now, the funding rate sitting at negative 0.000014 among average exchanges. We have FTX and DYDX, I believe. Combining those 1 hour funding rates is showing that there is some shorting going on. And just like MVRV, when traders are shorting and in pain or hoping that, or actually betting that prices are going to go down, gives a higher chance of things actually turning around and going positive. We can see quite clearly this was the Hopium era that we just looked at, where everyone was kind of getting a little bit too much FOMO. Funding rates were positive, and boom, we had a big correction. So now that we're in negative, higher chance of a little bit of a rebound occurring. You can see where the bottom lied. We really saw a lot of shorting going on right here, and boom, liquidations happened as a result. So that's what we want to see. You can also look at the 8 hour funding rate. Here we're looking at the average exchange funding rates on Binance and BitMEX, and it's a little more neutral here, not as much crazy noise going on. We saw a little bit of longing here, but in general, I would recommend looking at that 1 hour funding rate. It seems to be a little more on point. And 8 hours is such a long period of time that you could be 6-7 hours in, and the old data from 6-7 hours ago isn't going to be very relevant based on just how fast crypto is moving. Whale transactions, let's zoom out a tiny bit. It doesn't look like it's anything special on the Bitcoin side, so not much to say there. Now let's take a look at the amount of whale addresses that have been popping up on the BTC network. We see the largest addresses are the 100K to 1 million addresses, and it's basically just fluctuated between 4 and 5 of these over the past 6 months or so. We'll even zoom out to the last year. Yeah, so there were 3 at the end of 2021, went up to 4, now there's 5. Doesn't really make much of a difference in terms of price action. But if we look at the 10K to 100K, 1000 to 10K, and 100 to 1K, these are like the key ingredients. And we see sort of a mixed bag right now. The 100 to 1K addresses, they continue to rise. And that's a good thing because they certainly don't always. We had a big drop that was happening pretty much just in the week or two prior to the all-time high that happened in early November. You can see they peaked here at a little over 14K, quickly fell below, got down to about 13.5K before starting to grow again. I'll even overlay the price here. I can just type in price, click that, go down to the respective chart, and I'm going to switch it to a bar chart, go to color, make it a little darker here. And now we can see just how this is actually impacting price. So the amount of addresses, they've been rising pretty much since February. We did have a big drop off here, interestingly. So a lot of the big whales sold off right before or in line with that big June correction after the Fed funding rate. They rose the interest rates in a big way here in mid-June. But then after the dust settled, they started accumulating again. And you can see that the price hasn't really caught up with what they're doing. And in general, you can see the blue line and these green bars, they tend to cooperate pretty well together. As things go down, so does Bitcoin's price. As more addresses start to go up, there's a little bit of accumulation. You know, like this here was a bit of a divergence right there, where we saw the blue line going up and the bars going down. We also see right now, blue line's going up and the green line slightly down since that same period of time. So there are some divergences you can pay attention to, at least for the 100 to 1K whale traders, which are essentially millionaires. They seem to be optimistic, and the amount of these addresses are growing a bit. But on the other hand, like the 1000 to 10K, these are, you know, still active traders, but a lot more exchange addresses because it's such a large amount of money. Yeah, they've been declining huge since late March here. And until that changes, it's going to be a little bit concerning no matter what the blue line is doing. So that's the balance of the number of addresses. But why don't we take a look at the actual supply held? And the way we like to look at the supply held is we'll merge the 100 to 1K and 1K to 10K addresses together. And yeah, that's not great to see at all. We've seen pretty much since a week or two before the all-time high, the supply has been dropping out of these large wallets, and they're going much more into these micro addresses here. You can really see, if I take off these, starting at 0.01 to 0.1 Bitcoin, like, yeah, these are big growths right here between 0.01 all the way up to 100. I can even merge them together to see how much they have accumulated while the whales have been dumping. So beginning here in early February, the accumulation has began, and if I hold down Shift and I drag to the right, I can see that the yellow line, the 0.01 to 100 Bitcoin addresses, they have added 5.2%, while the red line, the whales, have dropped 5.2%. We would much prefer to see this flipped around. We want to see the large addresses that can actually control the markets getting richer and accumulating more and more of an asset, not vice versa. So yes, definitely a concern, no matter how optimistic we might be over, people shorting right now and the funding, the MVRV being very negative, which is good for bulls. The reality is we need to see that whales are still confident in the asset, and right now we're not seeing that confidence. All right, a few other Bitcoin metrics to look through. We'll get to this one in a moment. I think it'll be interesting to check out along with Ethereum. As far as the mean dollar invested age goes, the amount of dormant coins that are moving and how long they have been in their respective addresses on average, yeah, nothing too crazy here. It looks like the line keeps on climbing. So these old addresses are just getting older and older without a lot of movement. We want to see something more like what we saw in 2016 and 17, and here in late 2020 to early 2021, these dips in mean dollar invested age are equivalent to the bull runs, and they pretty much trigger them in most cases. But right now, we're not really seeing any signs of a plateau or a dip of any kind. And until that changes, we have to be wary. Now, we can be a little optimistic considering, in the previous peaks, we got to around 430 right here. If you look at the top left, let me make it a little bigger. So like this one, we got to around 430 before a big drop. This one back here, 446, 447, 450, and we're right there. We're at like 437 right now. So there is an argument that we may not get much past like 450 days before there is typically some big dormant movement and some big whale wallets decide it's time to move some coins and addresses that have been collecting cobwebs, so to speak. We could go all the way back. I think it goes all the way back to like a decade or so. Yeah, so like 2015 and 16 were pretty much as high as it's ever been. So if we started to really go past 450, that would be very, very surprising based on history showing that that has never happened before. All right, zoom back in here. Network realized profit loss, as expected, it's mostly little negative spikes without a lot of positive, because obviously Bitcoin has been dropping pretty substantially throughout the past 10 months. We would like to see like a huge spike like this, which is something that would correlate with the bottom. But for now, it doesn't look like there's a lot of realized loss going on in huge quantities at any like one given moment. Exchange flow balance, not much there either. I think let's overlay the supply on exchanges here. So yeah, it looks like there has been a bit of a rise over the past 3 weeks. It hasn't been much, but you can see pretty clearly, like over the past year, it's a continued drop in the amount of supply held on exchanges, and that's generally a good thing for the long term. Right now, we're sitting at about 9.17%. It got as low as 9.01, but still, we're very much in a better position than we were a year ago, and it was at 12.98%. So the smaller the amount of Bitcoin that sits on exchanges, the less likely another huge sell-off can occur with each successive wave down. Now, volume and dominance are interesting. I've told you guys on previous calls that we like to look at 20% as kind of an arbitrary number that indicates that there's an appropriate amount of focus on Bitcoin, which is obviously still carrying the rest of the markets to an extent. And lately, this section here, we've been pretty much below it for give or take about 2 months now. And as long as we're below, it means there's still a little too much focus on altcoins, and it can be not very not good news for crypto until we start seeing something like this. Now, when we did see Bitcoin's social dominance well above the line, yeah, prices were able to rise. And that's exactly what we want to see. We saw the same thing way back here in September, all the way up until almost the all-time high. About 2 weeks before it, at least, we were well above 20% social dominance. Prices were surging. And as soon as it went below, look at how it was really starting to stagnate. And yes, we had that final leg up, but this was essentially a fool's gold all-time high where there was a lot of celebration. But the celebration wasn't coming with a lot of discussion about Bitcoin. It was actually a lot of focus on, Dogecoin, Shiba, what was another, like Cardano, Luna at the time was getting a lot of hype. These are signs that there's a little bit too much euphoria and FOMO going on in crypto and not enough focus on in the quote unquote boring asset, Bitcoin. So, nothing has really changed since last week. And I'm sorry if this is kind of repeat information, but we really, really need to see Bitcoin's social dominance start to get closer to 20 or even above 20%. While it's sitting at 15, it's going to be a continued concern. Weighted sentiment also showing a lot of negativity right now. This coincides with the shorting that's going on right now. Yeah, we've been on a 1, 2, 3, 4, 5, 6, 7, 8 week now consecutive streak of negativity toward Bitcoin. And with the exception of this and this and this, we can say that every week since early May has been more negative than usual for Bitcoin. And this kind of FUD is what makes this overall amount of discussion in crypto platforms go down, because it's clearly a sign that people are dropping out of crypto overall right now, and that means there are just less and less participants, which is a double-edged sword. You can see the big drop off right here in late August. Let's look at like the last year. So it's going to show a gradual decline here with that big drop in August, but really, when there are less and less participants, yes, it's indicative that there's a far smaller amount of people believing in crypto, which is a good thing, but also we need a rising amount of people over time to be able to pump up the utility of Bitcoin, circulation, daily active addresses. These are the things that really make Bitcoin and any crypto asset churn and gain market cap. So there could be a point, probably from the whales, which are not accumulating right now, where they will pump up the price, and depending on how the market reacts, the normies in crypto, the people who own, tens or hundreds or a few thousand in Bitcoin as opposed to millions, they're going to decide whether they want to begin jumping back in crypto and then creating this sustained cycle of circulation that'll really allow another bull run to occur. But when there's less and less talk, it's really a sign of disbelief. And we are pretty much at the lowest levels we've been in over the last year. Yes, a very minor rise over the past couple of weeks, but nothing really to be too celebratory over. But this goes back to weighted sentiment here. So much negativity is usually a good sign. If we go back, we'll say the last 5 years to 2017. Take a look at, when most bottoms occurred, right here, perfectly right here on Black Thursday, even right here a little bit as the price was going down, eventually was able to bounce a little bit. And then this one here. So we're in kind of one of those big negative spike regions right now, 1, 2, 3, 4, give or take 5 to 8 of these negative spikes. This is among those largest negative spikes over the past 5 years. And in most cases, that's a good sign that a turnaround can happen. So keep that in mind, and definitely on the opposite end of the spectrum, if you start seeing spikes that look like this, yeah, that's a sign that a top can occur. So be careful there. All right, a few other things. I promised to show the ratio of transaction volume and profit to loss. We're taking a look at both Bitcoin and Ethereum here. Let's just look at the last 3 months. We'll go a little further, last year. So Bitcoin is illustrated here in blue. It's pretty much even right now. We're not seeing a major amount of transactions in profit or loss. Obviously, if we're seeing a ton of profiting like we were seeing in Ethereum last month, that's where prices tend to go down. And you can see on Ethereum, it's actually seeing a tremendous amount of lost transactions right now. It's third most in the past year, according to weekly data. In fact, I think this got lower, so it's the second most in the past year. Ethereum looks like it might have more chance of a bounce based on that. And while there's this much capitulation, we can be a little confident that there is enough trader pain to imply that at least a short-term bounce is probably around the corner. And I can go into Ethereum a little bit, but considering we're already 40 minutes after the hour, I think this might be a good time to open things up for questions. And if we can transition to Ethereum at some point, I'll try to do so. But I want to give plenty of time for some people to ask the questions they'd like to ask. So I'm seeing Solana near MATIC, Binance Coin. Did I miss anything earlier up, Balraj?
There also seems to be some interest in XRP.
Yeah, why don't we start with XRP and then we'll take some of DGen Mitch's, at least one of his. And if anyone else has some suggestions, please feel free to throw them in there. But considering the major price surging that's going on with XRP right now, I think it's a great place to start. We'll head back to our main template. Now let's take a look at circulation. Over the past year, it actually has looked okay. It's kind of risen a little bit, especially as these prices have risen just over the past week. Now, if we look at NVT, we actually have the XRP one up. And we do see that it's been in a bullish circulation divergence for about 5 months now. And it more or less bottomed out. Yeah, it kind of started to plateau here right as the bullish divergences were beginning. So this is pretty accurate. I mean, we can see when things get bright green here, as it did in late 2020 up until mid 2021. That's when prices just go bonkers. And on the other end, you know, if we see something in red like we did way back in 2018, prices tend to hemorrhage. So yeah, the XRP NVT model here is a pretty accurate one. And if you have Sandbase Pro, I definitely recommend using it. If you haven't yet, we have links on our academy that you can quickly find. Make a copy of this Sandsheets model, plug in your API, and you'll be able to access all the data on here. But in terms of what's going on right now, 5 straight months of bullish divergence. I mean, this breakout looks like it was predicted quite well. And now it's on the verge of breaking 50 cents for the first time, I believe, since April or so. So a good sign here for XRP. And I like the way circulation looks right now. Daily active addresses, more of a mixed bag. You know, we saw a huge peak in late January where it was getting over 123,000 or so, 125,000 daily active addresses a day. And then it mildly declined, actually pretty drastically declined, in fact, until June when we started to see a few weird anomalies. And I think that these probably were a signal that some positive momentum could occur because prices did start to rise just as these huge anomaly spikes happened. But yeah, right now it looks to be a lot more neutral once again if we zoom in. Yeah, it's just kind of chopping to and fro, but obviously fractionally compared to where it was back in February. So going down, daily active addresses, not much special to say there. Let's take a look at MVRV after this huge week that XRP just had, jumping about 50%. Understandably, the 30-day MVRV ratio has shot to the moon here, now up to 36% gain from the average 30-day trader. That's massive. That's shot up the 365-day MVRV to negative 16% or so, but that's still below zero. So that could mean that long term, there's plenty of room for even further rises than where it is right now. If we look at the 30-day MVRV, the last time we were actually this high was August of 2021. So yeah, we're going on about a 13-month high in 30-day MVRV. Just be wary that when it gets to these really high levels, that's when price tops tend to occur. So be a little careful there on the short term. There might need to be a little bit of a shakeout if there's all this FOMO going on. And once there is, perhaps there can be a resumption of even further growth for XRP, considering the long-term MVRV is still way in the negative. We'll skip funding rate because we don't have data on FTX and DYDX for it. Whale transaction count. Let's take a look at that really quick. Last 3 months, yeah, so we're seeing a big rise in whale transactions going into this big price surge, especially earlier today. It looks like we saw the largest 100K plus whale transaction spike in about 4 months or so. And that's interesting. It looks like, you know, there is some definite profit taking going on. Is it enough to turn the price around and make it go down? That's a hard thing to predict, of course, but in a vacuum, when we see big whale transaction spikes like this, it's usually a sign that a turnaround is coming shortly, just as we saw on the other end of the spectrum back in mid-May when prices were falling. A huge amount of whale transaction spikes were coming and price stopped plummeting and at least bounced temporarily before plateauing. And of course, Bitcoin pulled everything down. So this may not have really been XRP's fault so much as the fact that it just continued to attach to Bitcoin. Moving on to number of addresses. Let's see if there's some interesting stuff going on here. So the 1 million to 10 million addresses are continuing to rise. I think we need some long-term context on this one. Go to the last 3 years. So yeah, since early 2021, there's been a huge accumulation in these amount of addresses, 100K to a million. Yeah, all of these are just, it looks like, going to be going up over time. But I think the key one to look at is probably the 1 to 10 million one. And I'd presume the 10 million to infinity to an extent, but you know, these are a lot of founders and exchange addresses, so they have to be taken with a grain of salt. Let's overlay price really quick to see what kind of correlation there is here. Okay, so we'll full screen this really quick, get a good look. If we look at the 1 million to 10 million, it does look like when they are accumulating, price is doing okay, right? Like they were here. And then when they made this big dump in November of 2020, yeah, prices fell off a cliff and they tended to follow. Then they started accumulating here right at the beginning of 2021 and prices began to soar again. This is an interesting divergence here. They continued to accumulate as prices were dropping. This was right after the Bitcoin and Ethereum all-time high, so everything was falling down here. And then they've just continued to accumulate, really. Even right here, when they really started to get aggressive, it does look like that's when the bottom hit. So like, if I hold down Shift and I go right here, the price has been up 67% since they started accumulating. The amount of new addresses went up by about 8% by this 1 million to 10 million coin line. So I think there's some definite correlation here in the amount of 1 to 10 million XRP addresses that are popping up on the network. Now, besides just the amount, we can also look at the percent held. And to do that, we'll just overlay the percent held, put the price on here. full screen. And yeah, it looks pretty similar. The big dump, of course, you know, they went from a peak of 7% held to a base of 5.5% held, and prices definitely dropped down. After that, accumulation occurred. Prices did go up. In just about the same moment, they began to accumulate in mid-May. I think we saw June for the amount of addresses starting to accumulate. But regardless, they're pretty similar. And for those who didn't see the announcement yesterday, the price has risen as they were accumulating to the highest ratio of XRP versus Bitcoin in over a year. So they hit a year high on this push, which, by the way, it's now showing the prices up to 54 cents, it looks like. Let me double check that. It's saying 49. It varies depending on the exchange you're looking at, probably. But yeah, either way, I mean, there's been a huge price push over the past week, and it does look like the amount of addresses and the long-term accumulation of those 1 to 10 million coin holders have had a lot to do with it. Also notice the ratio of daily on-chain transaction volume and profit to loss. Zoom out a tiny bit to the last year. And this is the biggest day, yesterday at least, was the biggest day of profit taking since early April. So we're looking at about a 5.5 month high that is concerning. We don't want to see a lot of profit taking going on. We see the big spikes. Here, there was a top. Here, there was a top. And here, there was a top. So these big spikes will often end up being a major concern because there's so much profit taking going on. It pushes prices down until the amount of transactions in profit to loss begins to neutralize. As far as dormant coins, not a lot to say there, continuing to rise just like Bitcoin is. Network realized profit loss. You can see the expected spike as there's been some realized profit here, and that occurred pretty much, it looks like 20 minutes or so before the true price stop happened. So that would have been some great alpha to see right here. Exchange flow balance. Let's zoom out again. I don't think we have it for XRP. That's fine. Social dominance, not surprisingly, it's really started to soar. It's been on our trending topic list over the past week, and we're seeing the highest social dominance since early April for XRP. So that's a sign that there's a lot of FOMO and mainstream trader interest going into XRP right now. Weighted sentiment also has gone into the positive territory a little bit, but not to an extreme degree. And that's actually a little surprising. I actually thought there'd be a little more FOMO showing a bar way up here. But it's really nothing compared to what we saw in March and early April. So that's a good thing. And that's about it on XRP for now. Hope that answers some good questions for many of you who are wondering whether you should still be in it or should start to be in it or not. So with that, why don't we hit another question here? Do you have a recommendation for me, Balresh? Preferably an ERC20.
Maybe we can look into MATIC. That's one of Deegan Mitch's suggestions. And
yeah, let's do that.
That we both have mainnet MATIC and P-MATIC. That would be on the Polygon chain.
Absolutely. All right. So ERC20 MATIC. Circulation-wise, not much craziness to talk about here. It's been fairly flat. Daily active addresses. You can see the long-term trend has been a decline ever since the start of the year. That's disappointing. I mean, MATIC is an asset that many believe in and has probably a decent future based on its development activity and overall promise as a cheap alternative to Ethereum to move assets. I know it's getting popular in MetaMask and various places, but for now it doesn't look like it's being used a whole lot. And, you know, that makes sense. Just like many altcoins, MATIC's taken quite a hit since its top. It looks like on the 26th, it's dropped by a cool 74, 75% or so. So yeah, naturally there's going to be less daily active addresses. And I wouldn't expect that to change until there's a little more confidence in altcoins being able to rebound for a sustained amount of time. MVRV 30-day, it looks like it's sitting at about negative 10.5. That's a good sign. We talk about negative 15 being, you know, that point in which we are really looking for. Let me get the axis on here. There we go. So negative 15 right there. This is the point in which we really tend to see an opportunity zone appear. And it's staying just above that for now, but it's at least well below 0%. So that's good. As far as the 365-day MVRV, it's right around negative 40%. So that's something that is probably worth being optimistic about. We did see that it went all the way down here to about negative 73%, which is pretty crazy. I would be very surprised if it dropped down that low again. But it makes sense because there were so many people buying these very small dips in MATIC. It was a very popular asset because it made an all-time high like a month and a half after Bitcoin and Ethereum were already correcting. So a lot of people were really hoping for the best, and there's just a lot of belief in the asset long term. But they got really burned as prices dropped, and negative 73% is a huge, huge negative number to see. As far as funding rate goes, let's zoom into the last month. It does look like it's in negative territory. Negative 0.000015 is not an extreme number, but you can see that when there's a lot of shorting going on, prices tend to rise. There hasn't even been a lot of positive funding rate, but when there has been a slight amount of it, prices tend to drop off pretty quickly. Whale transactions are low right now. There's not a lot of excitement going on, so nothing to say there. Let's take a look at the amount of whale transactions happening. MATIC is currently at about 73 cents right now, so whales are mostly going to be in the 10K to 100K, 100K to 1 million. So we'll just have these two on. I think this is going to be mostly exchange addresses here. And then we'll overlay price once again. Over the last year, yeah, we've seen some interesting things going on here. So both the yellow and red lines, so all of the addresses really between 10K to a million, they've been going up pretty significantly since mid-May. And obviously since that time when the accumulation really started to rise, price has been zigzagged, but overall, like if we take this point here on May 9th and we drag to the right, price is still down about negative 22%. I mean, if I inch over to the very bottom here, then it's actually going to look like it's up. So depends on whether you want to go right before the big drop in mid-May or right after. But regardless, the people who accumulated right here, they're actually not doing too bad. And that makes a lot of sense. They were dumping. There were less and less addresses occurring going back to late November. And yes, there was an all-time high in December. But eventually prices really got hit hard as Bitcoin was correcting and all of these inflation concerns started to rise in 2022. But it's really good to see. I think this is a positive sign that there are so many more addresses popping up on the MATIC network right now, despite the concerning prices going on and the major trader pain that is occurring for MATIC as so many people FOMO'd in and got burned. Let's take a look at how the supply distribution looks as well. And we'll look at those same two tiers, 10K to 100K and 100K to a million. And it looks just about the same. Well, I don't even need to overlay price. We know how it looks. Lots of accumulation here. I really like to see both of them combined are gonna really show that we're in a good spot as far as whale confidence in this asset. And going from 2.74% held all the way up to 3.3, that's a big jump. That's 20% more MATIC added to these particular address tiers over the past 4.5 months or so. And that's what we want to see during a bear market, is certain assets seeing a lot of accumulation. And I guarantee you, not a lot of assets look like this. There's a lot that are just continuing to chop, or whales are dumping more and more. But MATIC is looking quite strong here in terms of whale confidence. So that's something for you to consider. Let's look at ratio of daily on-chain transaction volume and profit to loss. As expected, there is not a lot of craziness because there haven't been a lot of profit-taking opportunities. Mean dollar invested age, not really any dormant tokens moving. Network realized profit loss, pretty flat. Exchange flow balance is fairly flat. Very little talk about MATIC right now, and that's interesting. Yeah, this has been kind of just a straight light downward, and the amount of social volume toward MATIC per hour or per 12 hours. Let's go to like the last, we'll zoom in a lot to just an hourly social volume here, and we'll do the last 2-ish months. So yeah, per hour, only 163 in the latest hour, give or take like 200 to 400 comments per hour for MATIC is quite a far cry from where it used to be, where we were seeing like 5,741, 4,576. Like these are huge, huge spikes that we're just not seeing anymore. So MATIC is being a bit slept on, it appears, especially with very low social volume and dominance and a good amount of accumulation, as we just showed here. So that's an interesting combo that should intrigue some bulls. Weighted sentiment, pretty flat, pretty much makes sense because there's just not a lot of discussion overall. And that's pretty much it for MATIC. So thank you for that recommendation. Why don't we take one more and then we will call the stream here, Balresh.
Okay, let's go with Uniswap.
Good old Uniswap. Okay. So our good old unicorn asset here is seeing a pretty flat amount of circulation. Nothing too exciting here. Daily active addresses, nothing too exciting there either. Maybe a little bit of a pickup that we saw in June and July. There was a ton of development activity going on during this time as well, which was interesting. So prices did rise for Uniswap quite swiftly, at one point being up. Yeah, it had a big bounce of over 100, got up to like 146% at one point before it finally plateaued a little bit. But Uniswap is still looking pretty solid since mid-June, if you got in around there. MVRV ratio, 30 days looking fairly even. It is down in the negative territory a little bit, so better time than average to add on or create a new position in Uni. The 365 is pretty much where Bitcoin is at the negative 38% or so range. Funding rate, let's zoom in. It does look like there was some extreme shorts going on in late August where prices did bounce expectedly from that. There was a huge spike down here a couple days ago, right at the bottom, and then prices bounced. And right now it actually looks like there's a slight amount of longing. So in a vacuum, there isn't anything favoring what would be a big short-term Uniswap bounce based on the fact that people are longing at the moment. Whale transaction count, nothing special here. Let's take a look at how whales are looking. So the amount of 10 million plus Uniswap addresses, there's only 10 in existence. If we go up to 1 to 10 million, goes up to about 109, and that number has grown a bit, quite a bit actually. Since the beginning of the year, there were 85 at the base, and there are 109 now. So what's that percentage-wise? Give or take about 27% more addresses than there used to be. Supply distribution. Let's take a look. Actually, before we do that, we should look at some of the more realistic whale addresses. So 100K to 1M is looking up long term. The 10K to 100K addresses are definitely moving up long term. That's great to see. 1K to 10K has really started to zoom upward since mid-May. And then these are more of the micro addresses where they're always going to go up. But yeah, I think it's a very good sign that the shark and whale tiers, beginning at like 1K to 10K, considering, yeah, Uniswap's price is at about 580. Yeah, that's a shark address, I would say. The orange and blue lines being the sharks, they've been moving up. The yellow and red lines are also moving up. I think that's a pretty good sign that Uniswap is not going anywhere, and the big key stakeholders are staying put and going to wait out this bear market. Let's take a similar look at the addresses going on, or the supply distribution going on here. Let's see, the 100K to 1 million is still looking pretty good. 10K definitely moving up. They're getting more and more of the supply. These are pretty much looking just like the amount of addresses, so not much to say there. I like to see that the 1 million to 10 million coin tier, I mean, at its base, they were holding 31.8%, and now they're up to 34%. So the whales are getting more and more of the supply right now, and I think that's a very promising sign. Ratio of daily on-chain transaction volume and profit to loss, not much to say there. Pretty normal. Mean dollar invested age, nothing special. Network realized profit loss, nothing special. A little bit of outflow going on exchanges for Uniswap right now. If I add supply on exchanges as the percent of total supply, so it's gone to and fro. It had a big drop in supply from exchanges in late July, but it has gone up a little bit before finally dropping back down over the past week or two. Overall, though, 6.25% of Uniswap is a very small amount on exchanges, and that's a good sign. So the vast majority of Uniswap, a big DeFi asset, of course, is being held away from exchanges. So huge sell-offs can be limited. Social dominance, we have seen a pretty big uptick. It's been rising really since the beginning of August. We had the big spike here. I can't quite remember exactly what the event was that caused it, but it was actually being talked about at over 10%, 11% of the overall crypto discussion rates at that time. But overall, you can see the rise. I think Uniswap is getting more and more recognition and getting almost 2% per block. I don't know, I guess we'd call this per day, is a pretty significant number. It's one of the more talked about altcoins right now, and that's something that we should be mindful of. Weighted sentiment does look like there's a bit of an uptick, some positivity going on right now. We'd prefer to see FUD and negativity, so not great there. And that's about it, guys. I think we touched on 3 good altcoins. If anyone has a final question, I'd be happy to answer it along with Balresh or anyone else. Do you see anything else that people are asking? All right, guys. Well, thank you all for tuning in for the stream this week. It's a crazy, crazy time, obviously, with these interest rate hikes continuing to be doled out every month or two. it's going to remain volatile until the stock markets begin to settle down and have some consistency to them. But in terms of the impact of this one compared to previous ones, we mentioned that there's much less than there used to be. And to an extent, I think traders are a little bit resigned to the fact that, these interest rate hikes are just going to happen and they're kind of baked into the price. Many are arguing that's why, Bitcoin got into the 17Ks a couple months ago, because people are just factoring all of the rate hikes in and waiting for them to be over. So that's kind of where we're at right now. There are some positive signs with MVRVs being so low across the board. We'd really like to see Bitcoin's whales start to heat up a bit. And until they do, continue to expect a little bit of polarization. But the crowd could push prices up enough to get the whales interested in accumulating again. Or more commonly, it's going to be the whales getting more interested and then the crowd continuing to take the torch and pushing the price up further. So keep that in mind. I hope this stream was helpful. Thank you for giving this video a like if you have already done so. Tell your friends about these streams. We'd love to get more and more of you on. I've been talking to the team about once we start hitting a big enough number of viewers, once we're at like 100 or more again, like we were during the bull market, we'd like to start giving away some free Sandbase Pro subscriptions. So keep that in mind as kind of a collective goal for how we do on these streams. For now, on behalf of Balresh, Maxim, who couldn't join us today, thank you all, and we wish you a very pleasant and happy weekend. Talk soon.